Leslie Edwards Davis. I'm the Director of Benefits for the UAW-UMass Health and Welfare Trust Fund. And today we have Kate Murray from UMassFive College Credit Union. I'm going to let Kate introduce herself.
Thanks for having me, Leslie. So my name's Kate Murray. I'm a Community Outreach Manager at UMassFive College Credit Union. I've been at the credit union for about 15 years now, and I've done a variety of roles there, including working in our retail offices, our call center, loan center, and now I've been doing outreach and financial education for about 7 years. So one of my favorite parts of my job is getting to educate the community, provide some financial wellness education. I know I hate the words financial literacy. Nobody's ever financially literate. We can all learn a little bit, but you're never going to know it all. So we're here to just talk about some of the topics that are, at the top of our mind when we think about financial wellness in a brief sense. And we'll just kind of give some tips on how you can improve yours.
Thank you so much, Kate.
Yeah. Okay, so I am from UMassFive Credit Union. So I just wanted to share just a little bit about the credit union itself. So what you should know is that if you are a student or an employee at UMass, then you are eligible to be a part of our credit union, which means that we are a financial institution, but we are not for profit. So unlike banks, we are basically working together in order to pool our money and lend it out to each other and hopefully, improve our financial lives. And it's not about trying to generate profit for investment stakeholders. Everyone who belongs to the credit union is a stakeholder. So we serve the students and the staff of the 5 colleges. Everyone who has an account with us is considered a shareholder. And that means that you can either run to be on the board of directors, or you can vote to be on the board of directors, or both. And the board of directors, of course, is a group of folks that are volunteer-based. They are from all different walks of life, and they are, like you and me. And so they are making decisions about how to run the credit union in a way that is beneficial to everyone. Okay, so at UMassFive, our financial institution is very similar to other banks in terms of products and services. We have a full technology suite. We have branches or an ATM on all of the 5 college campuses. We also have branches in Worcester, Springfield, Leeds, Northampton, Hadley. And so we have quite a bit of reach in terms of where people can bank with us. We have I'm just going to basically talk about differentiators between us and other local financial institutions that people might choose to bank with. We have a free no minimum balance rewards checking account. So our checking accounts never charge any fees to folks, and you can actually earn interest and ATM refunds on them. So it's really great. We have lots and lots of savings options. Right now, we are doing a really good job of giving out really high rates on term share certificates, which is where you lock in your money for a short period of time, like 6 months, 9 months, 12 months, and you get a really nice rate in return. The thing that's different about UMassFive from other financial institutions is really in a lot of our lending products. Because we work with students and staff from the 5 colleges, we have like a unique clientele. So we've really worked to make our product suite match that. So we have products for credit building that are unique. We've got personal loans, auto loans, home loans, student loans, pretty much anything you need a loan for, plus loans for things you probably didn't think about. And we also have financial advisors that can help with retirement and investment advice. Finally, just wanted to mention to you all that we have a back to school promotion. So if you do decide that you want to open an account with us, that's called joining the credit union, you can do that online, or you can come in and see us. But we have a promo code fall23, and you get $20 when you open your account. So you can find out more about that if you go to our website, umass5.coop/fall23. Okay. Didn't want to be too salesy, but do want to let you know about the benefits of credit union membership. Talking about financial wellness, we know that finances are a top cause of stress for Americans. That's really, really clear. And I think that it's something that we can all identify with ourselves and relate to one another. And the thing that is important to keep in mind, though, is that financial wellness isn't a one-size-fits-all situation. Somebody who is starting out might be in a very different situation than somebody who already owns a home or has a family. So when we talk about financial wellness, it's really difficult for those of us who provide the education to make sure that we're being kind of even keeled in our advice, because we know that everyone that we're talking to is coming from a different walk of life. You also have different expectations for, what is important to you when you're thinking about your finances and your financial health. So that's the first step. And that's my first tip and piece of advice for today, is that when you're thinking about financial wellness and how you want to improve that for yourself, I want you to think about what it is specifically that's important to you and kind of set a goal that way. So whether that is, boy, I feel like I need to have better control over my spending and my maybe it's even, have more awareness about my spending and my financial habits. That's a first goal. Some people decide that, I'd really like to be able to absorb a financial shock. There's a statistic about how it's a shocking amount. It's over 50% of Americans would not be able to deal with a $1,000 emergency. That's really difficult. So that for a lot of people can be a goal, is that they want to start by saving $1,000 to feel, safe if something happens to them. Some people, it's more about, I want to make sure that I have a financial goal I want to achieve. I want to buy a house, or like, I want to go on this super epic vacation, or I want to buy a really nice car, or I want to start a business. Whatever your goal is, it might even be a less fun goal, like paying down your debt. That's a big one. Things like that. But you want to make sure that you're thinking about, what is important to you, because ultimately for some people, it's just, and most of us, we want to have the freedom to make choices that make us feel happy and enjoy our lives. So that's what I think about when I think about financial wellness. I will share that when I was growing up, I was in a pretty poor socioeconomic situation, and the stress level of my parents was, it was just there every day, every time we went to the grocery store, every time we did anything. And I remember that, and I can feel that when I think about money, because there's always an emotional component to money, right? So for me, thinking about going to the grocery store and not having to panic, that is a solid goal for people, no matter where you're coming from. So decide what you're thinking about when you're thinking about financial wellness. And that makes it a lot easier to achieve when you set a realistic goal for yourself in the beginning. So the first basic that I want to talk about today is money management, or budgeting, because all of us can benefit from at least looking at our spending and looking at our financial situation. There is a wide range of budgeting philosophies out there, and there are, all sorts of levels of depth you could get into with your budget. But there are some basics that I want to talk about. So the first thing I like to think about is when we talk about money management or budgeting, I like to call it a spending plan, because that helps me wrap my mind around what my goal is, right? So ultimately, what I want to do is I want to know how much money I have coming into my household. I want to know how much money is going out, where it's being, like, where am I spending it? I just need to make sure I have more control over where it's going. And if you don't know for sure where it's going, then you don't have that control, right? You want to plan out pretty strategically, like, okay, I know I have X amount of money and here's where all of it's going. That's the goal. And it's, a tool for you to be able to achieve the things that you want and need. And that's why it's important to do it. When you're working on any sort of budget, there's a few things you need to know, or a spending plan. How much money is available? Where am I currently spending my money? Like, how is it going out of my pocket? And is there room to adjust these things? And that's, those are the three main points I want you to deal with. There are lots and lots of, like I said, you could go real in depth with the budget, but you can stay at a surface level too and kind of dig into these items. So when you're thinking about what your household income is, you want to think about a few things. So if you're by yourself, you are independent, you don't share finances with anyone, then you're only looking at what your income is. If you are somebody who lives with a partner and you split your costs, but you keep your bank account separate, you're still only going to be looking at your income when you're thinking about your spending plan. And that's because one of the items in your spending plan is going to be, the joint expenses, the rent, the electricity, whatever. You know what your share of that is, right? You're not worried about your partner's side of it. If you are somebody who's living in a household with others and you like pool your money together into an account and spend out of it, then you're going to actually be looking at both your income and the other party's income when you're looking at creating your spending plan, because you're pooling it together and you're pooling all your expenses. And that's why you would look at that as a unit. You want to think about where your income is coming from. So if you receive financial aid, are you getting like a refund check? And if so, when is that coming for you? You want to think about if you're receiving stipends, if you have a paycheck, if you get wages, if you have a part-time job, if you have some sort of familial support, any government benefits that are coming into you, all of those can count as income. The goal is to estimate how much you're going to have on a monthly basis. Now, I know that can be really tough if you're working with financial aid and stipends where you get it, once, and that's to cover 6 months, things like that. So you do need to think about how long you're going to need to rely on the money that you receive for. So if you receive a lump sum of money and you know that, this is for the next 6 months, then take that amount that you received and divide it by 6. And that way you come up with a monthly income figure. The other thing is just keeping in mind, when is the money actually coming into my account? Where am I going to have access to it? If you're somebody who is working a job where you're getting like a weekly or a bi-weekly paycheck and you're living very close, like paycheck to paycheck, then when you're working through looking at your spending plan and your budget, you might actually choose to do that on a weekly basis or a bi-weekly basis instead of monthly, if that works for you. Those are options you can do. Expenses is the less fun thing to think about, right? So when you're thinking about your expenses, if you are somebody who uses credit cards, debit cards, you're going to have an easy task because you can just log into your online banking account or look at your statement and kind of go from there to evaluate what your expenses have been. If you're somebody who spends in cash, then your job is going to be a little bit tougher. Now, the goal here is to look at, like I said, I'm going to talk about a monthly spending plan here, but if you're doing a weekly or a biweekly, look at that time period. You want to know what your expenses look like across that time period. If you're doing a weekly or biweekly budget, I still recommend you look at your monthly expenses so you have a good picture. Regardless, if you're spending cash, you would have to start this process strategically because you're going to have to track your spending for a month. So you would have to think, okay, in October, I'm going to get receipts for everything I spend, or I'm going to make a note in my phone or write it all down, everything I spend. So you would have to kind of do a month of legwork in order to be ready to evaluate your expenses. If you are somebody who's using debit card, credit card, bank account, then you can actually look back at a past month statement to get that information. Try to think about your expenses in 2 categories, which is fixed, which are things that are not going to change over the months too much. Things like your rent. Utilities is on here, but utilities do bounce around. Unless, one of my big tips is if you can get on a budget plan with your utility provider, like I have natural gas at my home and I'm able to ask them to put me on a budget plan, which means they look at how much my gas costs over the course of a year, and then they divide that over the year. So instead of paying really high bills in the winter when we're heating and nothing in the summer, we pay relatively high throughout the year. And that way it's even. So that can be a fixed expense. Insurance is gas, again, sometimes bounces around a little bit, but you have a pretty good idea of what you're using. Loan payments, credit card payments, medical costs, dependent care, things like that are more fixed in your situation. The things that you have a lot more flexibility with are things like your groceries, going out, gift giving, what do we have on here? Vacations, grooming, clothing, all that sort of things where you have a little bit of control over it. I mean, you need to eat food. That is not a question. But, you could shop at a cheaper store or you could meal plan and be really strategic about that. So you have some flexibility in that category. I like to think about separating those things out now, because when you are working through the spending plan process, it allows you the opportunity to quickly look and see where you have flexibility to make changes if you choose to do so. Okay, so at this point, when I do a budgeting seminar, which I actually at UMassFive, we offer budgeting seminars to our members in the community, and they're a full hour for just budgeting. At that point, I work through getting really in depth with your budget. But what I want to tell you guys today is a little bit of a cheat here. After you look at your income and your expenses, I want you to think about doing a cash flow analysis for yourself. And what that is basically looking at what are the things that I have to pay, not everything else that's in our life. I want to know, like, what is the bare minimum that I need to survive, right? So you can make a list of that. You kind of pare down for what you've been looking at when you look at all your expenses. In this example, this person has their rent, utilities, cell phone, car loan, insurance, gas, and groceries. These are things that they need to pay every month to get by. So it costs them $1,380. And when they have their monthly income figure, they've got $1,500. So this is helpful for two reasons. One is that this is going to give you a great base for thinking about setting a goal an emergency savings, which I'll talk about in a second. But it also is going to give you an opportunity to see what wiggle room you have in terms of if you have extra cash in order to like decide, do I want to save? Do I want to pay down my debt faster? Things like that. So this is like the bare minimum situation to get by. And then it gives you the ability to know like, oh, well, great. I have a little bit of wiggle room here. So now what do I want to do with the extra money that I have? So this person has a cash flow of $120 per month. So, there are some things in here that they might, think about. Well, I might need to save up for my ticket home for the holidays when I go visit my family, or I might want to pay down a credit card I have, or maybe, well, this person doesn't appear to have a credit card, so that's good. Maybe it's about saving for holiday gifts or some sort of car repair they need, something like that. So they can be very strategic with that $120 and decide like, what do I want to do with this and what makes me feel good, whether it's spending it or saving it. So looking at your cash flow, your job is to be like, can I, first of all, can I afford everything that I want to pay for? Like that I have to pay? Can I pay all of my bills? And hopefully the answer is yes. If it's not yes, if you're feeling like your income does not support all of your basic needs, then you're in a situation where you're going to have to either seek out somehow to increase your income or find services to help you supplement in the meantime. And there are services to help you supplement in the meantime. I always recommend folks check out 211.org. It's a search, or you can call on the phone 211 and somebody will help you, but you can go online and search for like food assistance or housing assistance or any sort of assistance you want, and it will give you local resources for that. And there is no shame in taking advantage of services that are available for you. If you can afford all your basic expenses, then you want to look at like, can I afford what I want to set aside for my flexible expenses, like going out or buying clothes, things like that? Is there room for all of that? And then are there funds remaining for me to choose what to do with strategically? No matter what the answer is, like if you look at that person looks at their cash flow and they see they have $120, available per month as like a cash flow for them to do with as they wish, they might decide like they want more or they need more. They feel like they want to save more. They want to pay down their debt more. And if that's the case, they might decide, maybe I need to adjust the way that I have been spending. They have a grocery item in that list. Maybe they're spending more on groceries than they want to. And that's a really helpful tool to know, I would really rather be comfortable spending a lesser amount and using that towards savings or whatever. But that's your call. You want to think about, can I start on my savings goals, or do I want to pay down a debt more aggressively? So when you're thinking about making adjustments to your spending, I hope that you will be strategic in this element and not try to eliminate everything that feels frivolous. You're a human. You deserve to be able to, make choices and do things that make you feel happy and make you feel good. So what I have here are, your basic and your discretionary sort of expenses sorted out. The basic expenses are the ones that a lot of people jump to when they think they would like to reduce their spending. They're like, oh, I've got to cut back my, groceries, my utilities, I've got to cut back on my mortgage. And like all of those things are hard to change. Your mortgage or your rent are really difficult to change. A lot of times that involves, if we're talking about rent, you got to save like a first last security again. You've got to have time and money to moving trucks, all of that. It's very complicated. So there are paths of least resistance, I suppose, when it comes to thinking about where you want to cut back your spending. So just thinking about being strategic about your vacations or your going out, gifts that you give, any charitable donations you're giving, all of that you can plan for. So when you're working through a budget or a spending plan, you will see how much you've been spending on going out to eat or how much you've been spending on whatever hobby you have. And we all know hobbies can be very expensive, especially if they're like crafting and things like that. You'll see that on paper. And at that point, you'll be able to make a call and say, yeah, I don't feel great about this number. Maybe, right now it looks like I'm spending $200 a month going out to eat. Maybe I would be more comfortable if that was $100. And so then you would set your goal to be $100 per month instead of $200. And that's a fantastic start, and then you can be strategic in that. Do I go to McDonald's, more times, or do I go out to like a nicer dinner twice? You have some options within that spending plan or that budget you set for yourself. And gift giving and vacation are other big ones. Like, it just takes a lot of brain power to be strategic with those. So trust me, I know it's a big ask, but you can sit down and create a list of people you typically buy gifts for at the holidays. You can make a list of people that you typically buy birthday gifts for. You can't always control like wedding and baby gifts, things like that. Those kind of come out of the blue sometimes, but you can create a list of those folks that you usually buy for, and then you can set an amount you feel comfortable spending now. And you can say, okay, I'd like to give my niece something for $25 and my nephew something for $25. And that way it allows you to try to save for that before the holiday season. So you're not scrounging around trying to figure out how you're going to pay for it then. But B, it helps control impulse spending. Holiday shopping in particular and birthday shopping, like celebration shopping, is so fun and exciting when you want to celebrate something with somebody, and going out and seeing like, oh, this toy is so cool. Like, I'm going to buy this toy. But if you set a budget for yourself in advance, then you can kind of do some research and see like, what toys can I get for under $25, or, plan in advance instead of just figuring, I'm going to run to Target and look around at the toy section and see what I can get. Cause I bet you'll see something really exciting that's out of your budget and you'll buy it because it's exciting. So same thing with vacations. Try to be strategic, do your research, try to give yourself actual numbers to work from, like figure out how much does it look like a hotel is going to be, and how much does it look like my airfare might be, and my rental car. Like, figure it out and figure out how much time you have to save up for that, and kind of create like a monthly figure. So, if I'm saving for a vacation that's in 6 months and the vacation is going to cost $1,200, then I know I have to save $200 per month in order to get that $1,200 over the next 6 months, for example. So it's just about being strategic. Being in a college town, I feel like I have to say this, your student ID is like gold, I think. There's lots of student discounts out there because lots of places want student, money. So if you have an ID, like a UMass ID, you can use that for student discounts. IT has discounts or free software. The computer store has discounts for computers. The library has pretty much everything that you could ever want for free or for, free to borrow. I know there's like a 3D printing lab and there's a whole media lab, like you can check out so many things there. Taking the bus is free. There's lots of thrift shopping opportunities. I know I have this on here and I don't know if it's still a thing, but there used to be something called the New to You tag sale, which was at the beginning of the semester, which was like stuff students left the previous semester and you could buy from there. And there was great stuff there. And then, of course, buying your used textbooks is like a huge lifesaver. So definitely think about the fact that you're in a college town and there are some advantages to that. The other thing I will mention, because I have on here computer store discounts, is that if you do need to buy some sort of technology, knowing that there's a discount at the school store is great. We also at UMassFive, we offer discounted financing for buying technology to our UMass students. So if you need to finance your purchase, instead of throwing it on a credit card, it's better to check with UMassFive and see if we can do a loan for you to pay for whatever item you're trying to purchase. because it's the rate is going to be better than a credit card. Okay. So thinking about savings. So usually when I'm talking about budgeting, I'm talking about savings the whole time, but I want to make sure that we are exploring like more accessible ways of budgeting and managing our money. So I do want you to think about savings strategically too. After you look at your spending and look, make sure you can cover all your basic expenses, it might be something that you want to do is save. So the first thing that I recommend people to do is create an emergency savings account. And an emergency savings account by the book is saving 3 times your basic monthly expenses. So when you did that cash flow analysis that, you put your basic monthly expenses and figured out how much they cost, take that figure, multiply it by 3, and there's your savings goal. The 3-month figure is because the idea is that you will be able to live if something happens to your livelihood, right? So if you lose your income because you lose a job or a family member is sick, something changes and you don't have income, you want to be able to float your boat for at least 3 months. And that's because it takes a while for any sort of insurances that you have out there, your unemployment or disability, anything like that, PFML, any of the services that are out there to help support us during those times typically take time to kick in, either administratively or by policy. So 3 months is like a safe goal. I would say that if that number is daunting to you, you can decide on just a number. Is it $1,000? Is it one time your basic monthly expenses? Like, just create a goal and try to tie it into some sort of realistic situation for your family. Like, great, this is a month's worth of my expenses, or even like, this is a month's worth of my rent saved up. Then I know that if something happens, I at least can pay my rent for a month, things like that. So that's a great first goal. Other things to consider are, do I need a new car? Am I thinking about buying technology? Am I thinking about an apartment? Am I thinking about traveling? Things like children, weddings, houses, those are super expensive. And the other thing I want you to think about is retirement. Retirement is usually kind of something that young people throw in the back of our minds, but it is something that we want to save for over time. So if you don't have any sort of plan for retiring, that might be something you want to start thinking about too. You want to prioritize the things that are really pressing right now, but you don't want to forget about those long-term goals either. Okay. So the next topic that I wanted to talk a little bit about is how you can think about paying down your debt. So when you're in school or you're struggling with with student loans, things like that, it might just be like in the back of your mind that you'd like to pay down your debt. You don't want to be in debt forever. And that's totally understandable. I also think that debt is a little bit demonized in our culture. And I want to normalize it and say that, most people have to participate in the borrowing economy. Most people have some sort of debt on their shoulders during their lifetime. Is there, more safe debt? Yes, like a credit card is not the best kind of debt, whereas like a mortgage is better because it's tied to an asset. But regardless, paying down debt is usually something that a lot of us think about. So if you are in a situation where you feel like you really want to pay down your debt, that's awesome. But what I want you to do before that is I want you to make sure you've worked through a budget. So you really have a good understanding of how much money you have coming in and out and what wiggle room you have. But I also want you to have an emergency savings established. And that's because if you start throwing money towards your debts, just throwing any extra money you have towards your debts, you can run into a situation where you lose your job or something changes in your life and now you don't have any savings to back you up. Sure, you've paid down your debt and now you're paying a little bit of less interest, but now you have nothing to help support you. So you have to be safe and make sure that you are going to prioritize having an emergency savings before the aggressive debt repayment. When it comes to debt repayment, again, I have a whole 1-hour seminar on this, so I'll be as brief as possible. There's 2 basic strategies that people take. And one is called the snowball strategy. And for both of these, what you would do is you would make a list of whatever your debts are. And that list should include things like, the name of the debt, how much debt you have, what's the interest rate? That's really big. You want to look at that. What's the minimum monthly payment that you are responsible for? Those are the things that you would want to create on a list. You can make it in a spreadsheet. You can write it on a piece of paper. I don't care how you do it. The spreadsheet is ideal though, because when we talk about paying down debt, one of the strategies is basically sorting out how you're going to repay that debt, right? So Excel will sort it for you and make it all nice and neat. Once you do that, then you can decide how you want to approach, right? So the snowball method is prioritizing the debts that are the smallest first in balance. And the idea behind the snowball is that it allows you to feel more motivated in the process of debt repayment. So what you would do is, if you have, let's say you have like a $300 credit card and you're like, I want to pay off that balance. Great. That would be your first goal. You pay off that credit card, you're feeling good. And now you're going to move on to the next debt that's in line. And maybe that's like a car loan or a personal loan. Whatever your situation is, you're going to prioritize the smallest debt at the top and the largest at the bottom. And what you do is you figure out how much money you have to pay for your debts each month, right? So you can figure out, well, what is the total of the minimum payments? And then if you have any extra money that you want to throw towards paying down your debt more aggressively, then you add that to that total. So let's say you have like $2,000 to dedicate towards debt repayment. That's a lot of money, but I'm just trying to be even. Let's say you have $2,000 each month to pay down your debts. So you're going to pay all of your bills, the minimum payment for your bills, but then you're going to take anything extra. So let's say that your bills were $1,500 per month total. And so you had extra $500 you wanted to throw towards your debts. So the extra $500 would go towards whichever debt was, with a snowball, the smallest. And once you've paid that off, you then take the amount you're paying towards that debt plus the extra, and you move it on to focus on paying off the next debt in line. So the snowball is not paying attention to interest rates. So honestly, the snowball is not the best way to save money. The snowball is a really handy method for people who are feeling like they need to be motivated. So we actually recommend it a lot to people because it can be really difficult if, when you look at the list of debts and you decide to prioritize it by interest rate alone, you don't know. You might end up with like a really big balance debt at the top of that list. It's going to take you a really long time to pay it off. So we don't want you to feel discouraged. That's why we encourage a snowball method. But the avalanche method, which is prioritizing the debts with the highest interest rate first, is definitely the way to do it if you want to save the most money. So it'd be the same thing as with the snowball. You list out those debts and you, instead of sorting it by the balance, now you're going to sort it by the interest rate. And the highest interest rate is at the top of the list, lowest is at the bottom. So any extra money you have to pay towards your paying off debt journey goes towards that debt with the highest interest rate. And after you pay that off, then you're going to take whatever amount you were paying towards that debt and move it on and add it on to whatever you were paying for the next debt in line that you're going to focus on. So those are kind of the two biggest methods. There are other methods out there, but those are the philosophies that most people use. There are calculators online, tools that you can use to help you kind of sort out your debts and map out, if I do the snowball, how much money is it going to save me? And when will I finish paying off my debt versus if I do the avalanche? There's one, I can give these are some tools that I have tried before. There's one that if you go online and you type undebt, like UNDEBT.IT, so it's undebit. There's a tool you can use that is pretty thorough, and you put in the same information that I was talking about, here's the amount of the loans that I have, and here's the minimum payment, and here's the interest rate. And then its calculator tool goes to work and it says, if you try the snowball, this is what it would look like. If you try the avalanche, this is what it would look like. And they have other models of how you can consider structuring paying off your debt too. So you can probably just Google like snowball calculator or avalanche calculator and find something out there too. Regardless, it's about being strategic. A lot of us just kind of like say, ooh, I'm going to pay a little extra towards my credit card this month. And that's great. I don't want to sniff at that, but I do want you to think about being strategic about it so that you know how quickly you're going to be able to pay off your debt and what the impact of actually paying those debts looks like. And I wouldn't be talking about debt unless I talk about student debt. So one thing to realize is there's not a lot that you can do about student debt, right? Like it is what it is. We know that. So don't feel shame about your debt. But I do want you to not hide from your debt. I want you to understand what it looks like. I want you to know what's going on. So please don't bury your head in the sand because it's stressful. I understand that feeling, but it is not helpful. It's important to know what's going on with the debt that you have. As we had deferments going on because of COVID, making sure that your, loan was not accumulating interest if it wasn't supposed to accumulate interest, things like that. You want to know what's going on with the balance of your loan and the interest of your loans. So I know that the financial aid office at UMass is really pretty helpful. You can talk to them, for tips on making sure you have a good grasp on what's going on with your student loans. They can help you figure out, who's holding your loans and how you can access that information. So you can always use the financial aid office as a resource to help you out with that. The part that's more on your shoulders is if you have any private loans. Like the federal loans are, they're managed in a separate way where the school can help you a lot more with them. But the private student loans that you might have are more on your shoulders or on your co-borrower's shoulders. So if you have a private loan, I would want to make sure that you have some sort of like online access to see what that looks like, what the interest is looking like. If you want to think about making payments to those loans while you're in school, that can make a difference. You would need to have access to them. So definitely check into that if you have that. So I'm not thinking that you need to like track your student loans super diligently. You don't need to be looking at it every month, but just being aware of what is going on with that can be really helpful. And like I said, if you have some wiggle room in your budget, it might be something to consider to start paying towards the interest on some of your student loans while you're still in school. Depending on the sorts of loans that you have, sometimes the interest can start to build really quickly. There are some great loans out there that don't start accumulating interest until you're done with school. There are some that are subsidized that aren't going to accumulate interest. That there are great programs out there, but most loans are accumulating interest in the background and getting like out of control. So if you can make like a little dent towards that, fantastic. The other thing I will say is that if you are somebody who has seen lots of advertising about student loan consolidation and things like that, I want you to consider that as an option for you. Consolidating your loans basically means piling your loans into one big loan. And the hope is that you'll have a better rate or a better payment. But you want to make sure that you're careful about combining federal student loans with private student loans. And that's because federal student loans have the best protection in the world. They're going to be the most forgiving out of any sort of loan. Those private student loans are just with banks. And so banks are not going to be as forgiving. They're not going to have as many repayment options or deferment options, things like that. So you don't necessarily want to take federal loans and put them into a private loan because then you lose all those protections. It's something to think about. Pivoting pretty majorly, I do want to talk briefly about credit because that is so important to our financial wellness. So when we talk about credit, I have a lot of young professionals who have come up to me when they're thinking about buying a house and they're like, oh my gosh, I went, to apply for a mortgage and I don't have any credit. And it's very common. If you don't have a credit card, if you don't have a car loan, if you haven't been paying on student loans, like if you have student loans, that doesn't mean you have credit. You have to be actively repaying student loans to have achieved a credit score and a credit history. So if you don't have those sorts of things out there, then you're not going to have a credit history that will allow lenders to want to approve you for loans. So that's something to think about. There are lots of ways that credit is going to impact our lives, right? So it's not just about getting loans. Sometimes it's about getting insurance. Sometimes if you have a poor credit score or no credit score, an insurance company might actually charge you a higher premium because they consider you to be more risky than someone else with a better credit score. Rentals are the big one for students. If you are trying to rent an apartment, they usually will check your credit to make sure that you're credit worthy. If you think about it, I guess a lease is like a loan, right? So you're agreeing to pay a certain amount for a year to have the pleasure of living somewhere. So they want to make sure that you're good to pay that. And a lot of times students don't have credit, so they have to get like a co-borrower who does have credit. And, not all of us have parents or family members that have a credit that's going to help us. So that can be really difficult for students to deal with, especially when you're exiting school and wanting to live on your own. And then employment. Some employers will do credit checks on you. So for all of these reasons, it is something you want to think about to figure out, how can I establish credit for myself while I am still, in the schools and still studying and working. So a couple of suggestions for you is, the number one way I think to build credit for anyone is to use a credit card. And that's because credit cards are a major part of what composes a credit score. So when the formula is created for a credit score, they are looking at a few things. They're looking at your payment history on loans that you have. So if you don't have a loan yet, you have nothing there. But with a credit card, 30% of what they're looking at to figure out what your credit score is going to look like is how you use lines of credit, which is what a credit card is. So if you get a credit card, you're automatically going to be able to show how you use line of credit, and you'll be able to show you're making regular payments. So you're going to start generating credit history and therefore a credit score pretty reasonably quick, like 3 to 6 months. So what I recommend to people, especially if you don't have a credit card yet, is to apply for a credit card with a small limit on it. And that's because I'm going to tell you how to build credit with it. Put one of your subscription payments on it. So if you have Hulu, Netflix, something like that, not even anything too costly, set it to be paid monthly from your credit card that you apply for. Then set your credit card to be paid automatically from your checking account every month. Pay it off in full. And then you don't have to do anything. What'll happen is your Netflix gets paid for every month. The credit card company will send a statement saying, "Oh, you owe us," I don't remember what Netflix is now, like $11.99. Hopefully there's a student discount on that. $11.99. And you have to pay us or we'll charge you interest. And your checking account will automatically pay off the $11.99. You will pay no interest, but it will be reported to the credit bureaus that you have participated with a credit card, you've used it responsibly. And that is going to help build your credit immensely. So that's the number one way that I recommend to build credit. But if you're uncomfortable with credit cards, that's okay too. There are other ways. At the credit union, and I'm sure that there may be other financial institutions that have a product that's similar, but we have something called a credit building loan. And a credit building loan is basically a situation where we created this to trick the credit bureaus to help people build credit easily. So what it is you'll take a loan for, let's say, $500. And what that looks like is you're actually just going to be making payments of, whatever that looks like. Let's say it's like $60 a month. You make a payment and it goes into an account for you. And those payments are made monthly. And then when you're done paying the loan, you just have like a savings account of money that you paid in. And the whole time we're reporting that you're paying a loan to the credit bureau, and that helps establish credit for you. So that's a possibility. It doesn't impact your credit score as much as a credit card does because it's not a line of credit, but it still would help for sure. Other things that we've developed to help build credit, we have our technology loan I mentioned earlier, our computer loan. We actually have a loan to buy a bicycle. I don't know if you've been in the market for a bicycle recently, but they are quite pricey. So something, even like a basic bike sometimes can be $500, which is a lot of money. So you can get a loan to finance the $500, pay us back with a low interest rate, and that will build credit. Our farm share loan is actually our most interesting loan that we've created. This one, and this you'll only find at a credit union. This loan finances the cost of a CSA or a farm share, which is when somebody pays a farm upfront a certain amount of money, and the farm is able to then use that money to, help do their planting, manage their farm. But when you pay that money to the farm, they then are offering you a share of their crops when they harvest. So we actually have a loan for that. So let's say that the farm share is like $400. Then you get financing for the $400. You take the check, pay your farm. You're all signed up for your farm share, and you pay us back over 6 months. with no interest. So you basically are just able to get a farm share, spread the cost over the 6 months. It gets the farmer the money faster, gets you away from having to pay $400 out of pocket right away, and you're paying no interest for it. And we love local food. So that one is a way to build credit with no interest at all either. So lots of great ways out there to help you in that process. Again, I do want to mention, for those of us with student loans, if you have student loans that are not in active repayment, they are not building your credit score because you're not showing any behavior that the credit bureau would care to look at to see if you're being successful in repaying those debts or not. Okay, so that was a lot of information. And so what I want you to take away from this are a few resources. So of course, I want you to consider UMassFive when you're thinking about, do I want to be a part of a credit union? I hope you will consider us. And even if you're not, you can reach out to us, to mull over anything with your finances. We have an office right in the campus center at UMass. It's in the little hallway between the student union and the campus center. So you can pop in there if you want, or give us a call, come on our website, anything you want to do. We also, I would love to give a plug to Smart About Money, which is an organization on campus at UMass. It is an undergraduate program, but they do have really good resources. Basically, it's a peer-to-peer financial wellness group that we helped train up so that they can, work with students to talk about money, talk about budgeting, talk about things that are emotional and embarrassing for them. And we're so glad that students can talk one-on-one to one another. They also do provide financial wellness seminars like I provide. So they're an option on campus to talk to if you have any questions. The UMass Dean of Students Office is a really helpful resource. They do have grants to help people who are struggling financially. So that's something you can check in with if you're struggling. Student Legal Services is a really great resource on campus. It's the only time in your life you're going to get free legal help. So I recommend checking them out if you're having any sort of struggle that involves legality. I mentioned earlier 211.org as a resource that you can just go on and search for any local resources for yourself regarding like food or housing, things like that. And I offer up my email address, cmurray@umass5.coop. You can send me questions and I'd be happy to point you in the right direction.
Kate, thank you so much for joining us today. It's always such a pleasure to have you run down all of this really helpful information. I'm actually down the hall from your campus office right now in the student union. And I did want to highlight a couple of things. There's a few ways where our benefits interact with benefits of members of the credit union. So one way is that if you're contemplating buying a bicycle, we have a wellness reimbursement that will reimburse you up to $225 of that. And then you could finance the rest of it using the bike loan. So there are some ways that we try to have some synergy between our benefits and other benefits to make things within reach for you. But definitely check out UMassFive. They're really accessible, they're really friendly, and they're committed to financial wellness, which we are also committed to trying to provide financial wellness information and opportunities to our members. There was a recent MetLife employee survey that we reviewed the data of that said that concerns and worry over finances is one of the top stressors in employees' lives. And so we are trying to redouble our efforts in giving you some tools to try to get a handle on those concerns and worries as best you can. So thank you so much, Kate.